Welcome to the Titans of Industry show. If you haven't been living under a rock, you are of course familiar with my guest today. From small town America to successful fund manager to thrill-seeking adventurer to proud father, Jim Rogers, one of the most vocal critics of U.S. debt policy, is with me today. A brilliant guy. I'm glad to have him back on the show. I urge you to both Google the name Jim Rogers and get a copy of any of his books with an emphasis of on a bull in China, one of my favorite books to understand the caliber and the scope of skill Jim Rogers brings to the table. I allow myself to refer to him as one of the living legends of the investment world. Mr. Rogers, how are you today?
I'm fine, but I should hang up now. That was too much, much too much. But anyway, here we are. So let's go forward.
I hope someone would say the same about me one day. I want to first ask you, what is the most hated, disregarded, and therefore cheap asset class worth looking at according to your analysis today?
Well, that's a wonderful question, and one I occasionally ask people myself when looking for investments. I guess three or four things come to mind. Russia, Venezuela, Argentina, probably Venezuela would be the top of those three. Also today, maybe Argentina, since it's just collapsing this week. So one of those three currencies and nations would probably be the place to look. Although maybe Iran today too, because of what just happened.
Interesting, and obviously there's an election coming in about a week or so here in Venezuela, which will determine a lot of the future for this country. Jim, the Trump elections has really changed the mood in America. Businesses are hiring, wages are being raised. I was just on listening to the CEO call of Kimberly-Clark, of General Mills, of Colgate. They're all raising wages and talking about their costs going up. People are quitting at record numbers their current jobs to pursue better jobs. The economy is reaching peak capacity. Some would even say overcapacity. The risk for general inflation across the board, in my opinion, is bigger than at any time since I began investing in the year 2000. Am I exaggerating?
No, you're exactly right. If you look at profitability, if you look at any sort of normal measure of the economy, of the markets, or anything else, you will see it's near all-time highs. Now, whenever something has been at all-time highs, it can only go one way, or it usually only goes one way, and that's down. So I'm not saying everybody should rush out and do anything today, but they should be aware that whatever we're doing, whatever's going on right now, is near an all-time high, and it usually doesn't get too much better after that.
Now, Jim, you've been investing for 50 years. If I'm correct, I remember you telling me that you started in 1968 in Wall Street. That is incredible. I am very interested in your opinion regarding the transition that you've seen over these many, many decades between a U.S. economy driven by baby boomers' demand to a U.S. economy that will now be going forward driven by millennials' generation demand. This is the next people to buy homes, to buy cars, to go on vacations, to spend on consumer goods. These are the millennials. Is it fair to say, though, that the Chinese middle class is only a few years away from becoming more crucial to global growth than the American consumerism?
Well, just because of history, the Chinese, didn't have a market, didn't have anything until maybe 1978, 1980. Mao Zedong was a great guerrilla warrior, apparently, but he was pretty hopeless at running a country, and therefore he ruined the place. Deng Xiaoping came along in 1978 and said, let's change things, and so, but you know the rest of the story from then on. So things are much, much newer in China. We in America, you can measure whenever you want to, whether it's 100 years or 200 years. In America, we've had an investment economy and a consumer economy, et cetera, and the Chinese just got to it. So yes, it's newer there. They're by the way, there are many, many, many more of them, obviously. And the Chinese do have historically a much higher propensity to save than we do in the U.S. or even in the West. That's always been a trait of theirs. Now, at times in the West, we've had a very high savings rate, yes, but never nothing quite like what the Chinese have had historically. So they save and invest more than we do, and there are a lot more of them, and they're new to the game.
Interesting. Now, Jim, I'd like to ask you, have you participated or are participating in the speculative boom in cryptocurrencies or in the blockchain technology?
Well, I would love to find a way to invest in blockchain. I have not found a way yet myself. If you know a way, please tell me. Don't announce it now. Send me an email later. I don't want you to blurt it out because I am looking for a way to invest in blockchain. It already is changing everything we know, and it's going to be dramatic, even more dramatic going forward. As far as cryptocurrencies, no, I have never bought nor sold one, so maybe I don't know what I'm talking about. But I don't expect most of them, if any of them, will make it. You have heard of IBM, I'm sure. Well, IBM did not invent the computer. You've never heard of the company which invented the computer, nor the dozens of companies that were around at that time. There are computers, but IBM didn't invent it. The one who did disappeared. And I would expect most of these will disappear also. And I'm not sure, I just got through saying that blockchain has a great future, and internet and the computer is changing everything we know, including money. If you go to China now, well, I was just in China, I tried to buy an ice cream. I couldn't buy an ice cream because all I had was money. The woman couldn't take money. As you probably may know, in China, everything is on your cell phone now. And I didn't have money on my cell phone, so she couldn't sell me the ice cream. This poor old man with money. She didn't know what to do. In the end, she gave me the ice cream. I wish I'd been buying a Mercedes or something, because she just gave it to me. So I'm just saying it's already happening one way or the other around the world, and the computer is going to change money. Whether that's going to be a cryptocurrency, I doubt it seriously. And if it is a cryptocurrency, it's going to be government cryptocurrencies. All the cryptocurrency guys will tell you we're smarter than the government, and they are. My goodness, they all are. But the government has the guns, and in the end, we have to do what the government says, whether we like it or not. I certainly don't like it, but they have the guns.
Very interesting. And I know many people share your opinion regarding this two ways of looking at things. One is the blockchain technology itself. The other one is the future of cryptocurrency or any of the projects that are basically not regulated properly right now or competing with fiat currencies. I want to ask you something that's very provocative. I've studied this a lot, and it looks like people's holding periods for stocks have dramatically diminished. People are buying S&P 500 stocks, blue chip stocks, and they hold on to them for 180 days or 3 months. A company cannot even do a shareholder meeting, a yearly shareholder meeting, because they have to do like 4 of them if they want to really have all these investors voting on what should happen with the company that they own. It's absolutely different than in the 50s and 60s where people used to own companies for 8, 9, 10 years. How important is a holding period when you are holding the right company, when you're holding a company that is in growth mode? And I want to broaden this question and ask you, how important are dividends to investors?
Well, historically, dividends have been a large part of the total return of investing. I think I'm going to say a third, but don't hold me to that because I haven't looked it up recently. But over any long period of time, about a third of the returns from stock gains have been in dividends. Now, that doesn't mean if you find a company that goes up 10 times in a year or 5 years, that's where you make your return. But most investors and most returns are affected dramatically by dividends. So it's very important. To your other question, there are a lot more investors now than there were in the 50s and 60s. Investing in the 50s and 60s was really sort of a backwater. Not too many people knew much about it, and not too many people did it because of the crash, the war, the depression, and many other historic reasons. Now, of course, we have many new. We have maybe 3 or 4 times as many as investors as we did back in those days. Many of them are new to this, and they're more interested in hot money and getting rich fast. I mean, I want to get rich fast too, but it's not that easy, so be careful.
Interesting. If there is any one thing that you wish you could have pulled the trigger on and didn't throughout your illustrious career, what would it be? A sin of omission, Warren Buffett has called it.
Well, I guess probably that I didn't move to Asia sooner. I first went to China in 1984, and I saw what was happening. I went back to the U.S., to New York, and explained to many people what was happening. They all, of course, scoffed and scorned and said, no, Japan. And I said, no, China. So I wish I had been smart enough. I saw what was happening. I wrote about it. I lectured about it. I broadcast about it. But I didn't do anything. I mean, I didn't move there. I guess I should have moved to Asia sooner. That's probably the biggest regret. I mean, I didn't have a bad time in New York or in America. I went around the world twice. I did a lot of other things, new things. I was a professor, TV shows, things like that. But I guess it would have been the absolute brilliant time to move to China if I'd been smart enough to do it.
Well, that's very interesting. When the stock market crashes again, when it happens in the future, whether it be in 6 months, in a year, 2 years, who knows, there will be far fewer 401ks buying the dip this time. What's been happening for almost half a century. With the baby boomers basically using their 401ks to prop up and become the buyers again after crashes. But now it looks like there will be more 401ks liquidating to fund retirements than to fund the stock market. Who become the new buyers or the new buying power for U.S. equities after the next big crash?
Well, that's insightful. That's well said. Yes, America does have an aging population, becoming dramatically aging population, and those people will be selling rather than buying. Who will be the new buyer? I don't know. Maybe, there have been many times in history when we've had protracted bear markets, or not even bear markets, just sideways markets. Stocks don't always have to go up. The Dow Jones was at 1,000 in 1966. The Dow Jones was still below 1,000 in 1982. That's 16 years. So stocks don't have to go up all the time. And there have been many periods in history when they haven't gone up. Between, 2000 and 2010 or so, I think if you looked at it, the market more or less was sideways, but periods of up and down. So be careful. The brokers will tell you stocks always go up and you always make money in the long run. Yes, but sometimes the long run is 10, 15, 20 years, and that's not a lot of fun.
I want to ask you about Singapore. Could you tell people about this little tiny place, which is an exemplary success story about how life can be basically expanded to an enormous level of success within this little culture?
Well, Singapore is but Singapore is the most successful country in the past 40 years. I would say China in the past 30 years, but certainly Singapore in the past 40 years. And Singapore is tiny, as you point out. I mean, they've got 5 million people. 50 years ago, they had 500,000 people. I mean, it was a small swamp with 500,000 people. It became the most successful country in the world. It became successful because it had a guy who was visionary. He insisted that everybody save and invest their money. I mean, he made people literally save 35% of their income. I remember the first time I came here and they told me about that. I couldn't believe it. I said, how can that possibly be so? But it was. So I know it's a shock and astonishing, but he made them do it. I mean, not everything he did what I would approve of, but he had semi-dictatorial powers, which he had. Now, most of what he did, well, the results are great. You can look out the window and you can see, oh my God, look at this country. He insisted on education. He insisted on bilingualism. Everybody needed to speak 2 languages. He insisted that everybody have a strict and disciplined advanced education system. He insisted that everybody save and invest. And he went and recruited lots of industry based on bilingualism, cheap, disciplined, hardworking labor. He gave them incentives to come here. He did his best to recruit people. If you were educated, smart, successful, he begged you to come to Singapore. He gave you incentives to come to Singapore. And people did. And the result, as I say, look out the window. If you're ever in Singapore, you'll see the result. It's been extraordinary. You know, we in America in the 19th century had some periods in our history. We begged people to come to America, to immigrate. We gave people land. We literally gave them land if they would come to America, if they would work. And he did the same sorts of things. And the results are pretty clear.
Yeah. Well, you know, I was born in Israel, and when the country formed, they also gave people incentive, especially Jewish people, to come in, and they gave them land in very rough places, swamps, to kind of colonize Israel. And even before it was called Israel, it was called Palestine throughout the first half of the 20th century. So definitely can relate there. I also want to ask you, before we move to the next question, what are these 2 languages that the Singaporeans speak?
Well, the main 2 are English and Mandarin. Mandarin Chinese are the 2 he emphasized. But you could also speak Malay, which is spoken extensively in Indonesia and Malaysia, or Tamil, which is an Indian language. But most people speak English or Mandarin, English or Chinese.
Interesting. I'll be in Singapore this December myself for the first time. What are the ways in which the debt situation, I'm talking the U.S. federal debt, can be resolved over the long term? Obviously, running deficits cannot continue for good, and inflation or runaway inflation would have to be the measure of last resort for any government. Things would have to be very crazy for them to run the risk of giant inflation. Should retirees expect to see the age of retirement postponed significantly? Should they expect to meet some new rules to qualify for Medicare, for example? How can the United States government, what are the tools that they have in order to stop what they're doing right now? And is there even an incentive right now? It seems like the United States is not feeling the pain of what they're doing. It seems like the world keeps buying the debt, no matter what the rates are, and the U.S. dollar is still 6.3 6.3 currency units out of every 10 currency units in the world. So it's so dominated by U.S. dollar. What is going on in your opinion, Jim?
Well, historically, throughout history, hundreds of years, thousands of years, countries that have gotten themselves into this kind of debt situation have never cleared it up without a crisis or a semi-crisis. Maybe the U.S. is going to be different, but the U.S. is now the largest debtor nation in the history of the world. No country in world history has ever been anywhere nearly as deep in debt as the U.S. is. So maybe somebody's going to wake up one day and everything's going to change. We're going to stop spending money we don't have, etc. I'm terribly skeptical of that, because anybody who would do that is going to cause so much pain that he or she is going to be assassinated or thrown out of office or something else, because the situation has gotten, as you well point out, beyond the point of no return. You talked about changing retirement. Sure, all that, if the things you mentioned would be good news if it happens. More likely, what's going to happen is they're going to take everybody's retirement funds away from them. They've already made it legal for the government or banks to take over your savings account. That's not legal even 10 years ago, much less 5 years ago, but they've changed the laws so that the banks can take your money if they want. The government in some countries, Poland, a couple of others, have already started confiscating 401k retirement plans. The government will certainly do that before it's over. And by the way, they're going to do it for your own good. Don't worry. They're going to come to you and say, you've been having problems with your investment accounts. The markets have been doing badly. So we're going to save you. We're going to give you 30-year government bonds so that you don't have to worry about your retirement or fluctuations or anything. They're just going to take your money. All of these are going to be attempts to save the situation. They're not going to work, but no, it's going to be a mess. I mean, it's always been a mess when countries go into decline and have problems. I mean, look at 100 years ago, the United Kingdom was the richest, most powerful country in the world. They thought, well, UK is not even in the top 25 anymore, et cetera, et cetera. So the world will change. We will have to have problems. I don't particularly like saying this. I'm an American citizen. I'm an American taxpayer, American voter. But one has to face facts or one will go down the tubes too.
It's amazing to think, that the U.S. can become a top 25 country after leading the world for so long. But if you would have said the same thing to a citizen of the United Kingdom 100 years ago, he would be shocked that you even point out such a possibility. So it's just amazing what history and time can do, and wrong decisions. I want to ask you, look, Wealth Research Group just wrote an extensive report regarding lithium and the rise of electric cars at wealthresearchgroup.com/Chile, like the country of Chile. Jim, over in India, over in China, they are looking to do away with gasoline cars altogether in the next 2 decades, I've read. Is that realistic? Are we seeing indicators to point to that trajectory?
Well, from what I'm not a scientist or an engineer, but from what I read, certainly lithium has a dramatic future, one way or the other. There are always new developments coming along. I mean, graphene is another very exciting development on the horizon, apparently. So, yeah, I mean, from what I know, lithium has a great future. But again, don't rely on me. I just know what I read. Some things I know, some things I just read.
Very interesting. I'm very interested to know your thoughts on why investors are buying U.S. Treasury bonds at such low rates for a decade. What is going on in the minds of these institutions? Could you try to explain to us? You've been to Wall Street. You lived Wall Street for so long. Is there something that we're missing?
Well, a lot of what we're missing is that there's a Federal Reserve that's buying a lot of this paper, and for historic reasons, many investors, pension plans, endowments, insurance companies have it in their minds that they have to buy bonds, and so they just buy. Now, a new generation will come along someday and still say, how could you be so crazy as to buy bonds? And all that will change. But for the first, I would say, 70 years of the last century in America, most investors bought bonds. I mean, there were sayings like, gentlemen don't buy stocks. Gentlemen don't buy common stocks, and they were known as common stocks. And then in the late 60s, and because of the Depression too, of course, it made stocks somewhat skeptical, people skeptical of stocks. Then in the late 60s, the Ford Foundation did a major study which pointed out that if you bought stocks, you could do as well as bonds, and maybe even probably better than bonds. And so a whole intellectual mindset started changing, because then they had some legitimacy. They had, proper study, academic study, Ford Foundation, etc. And so the idea of common stocks became more and more accepted by investors, and they did. So for most people, they grew up buying bonds. and having to buy bonds. That has only slowly been changing, but there's still many insurance companies that, if you went into the board of directors and said, we're going to stop buying bonds, they would throw you out of the office. So there are a lot of people who buy them, whether they should or not.
I just read, my partner and I both read a book called The Davis Dynasty. It's about Shelby Davis. And you know him. So the amazing part about it is a very historical book because it goes back to when he was born, and you kind of see how this hatred and love of stock is just going on forever. With external events making people just fearful of them, and then loving them, etc. It's just an amazing book because it goes through all of these cycles that someone like me who's 33 hasn't experienced, and this is one of the best ways to experience it. I want to ask you also about your own legacy and what you are teaching your own children. You wrote a book about this. What are you teaching your children about money and opportunity?
Well, not much right now. I'm mainly teaching them that they have to work for their money. They have to save. They have to. When they were born, I got each of them 6 piggy banks for different currencies so that they would learn there's different kind of money, and you have to save it no matter what. And that's mainly what I'm trying to teach them now. They don't have much interest in investing or shares, and I don't want to force that on them. I want to wait till they come to me and say, "Oh, Daddy, what's a stock? What is all this all about? What is Apple stock, etc." When they're ready, and I hope I'm smart enough to teach them. At the moment, we make them save, we make them invest. I told my older daughter who is 14, when she turned 14, she had to get a job. I thought she would go to McDonald's and get a job making $8 an hour or something. Well, she's teaching Mandarin and making $25 an hour. She's a lot smarter than I am. And by the way, she complains that she's only making $25 an hour because the grown-ups, make much more than that, grown-up teachers of Mandarin. So I'm teaching them they got to work, they got to learn to save, and the rest will come later. I'm trying to teach them to be very skeptical of everything they hear. I'm trying to teach them to be curious, be very curious, and not to believe stuff they read in the press until they themselves know that it's accurate or not. I'm trying to teach them to beware of boys. I'm teaching them various things about life, I hope. Yes, they're both daughters. Yeah, I have daughters.
Yeah, very interesting. I know from my partner who also has 3 children that are around 7 and 8, that he is teaching them not only to save but obviously to invest. The reason that he's saying that kids do not save is because they don't see that saving does anything. You just keep that money in whatever, in your room or something, and they don't understand that it can grow. So he's actually borrowing that money from them and telling them he'll pay them an interest on the money, so they start to understand that they can use the money to earn more money. And I think that is a very nice way to get children to appreciate the power of having capital. I want to ask you lastly.
Well, I just wanted one last before you go to the last question. In our case, what we do is we, at least once a year and more, when there's enough money saved up in the piggy banks, we go down to the big bank and put it, in their account. And I go with them, but they actually make the deposit, and they have learned about interest because, the big bank gives them interest, and they see every year that they get more money for doing nothing except putting it in the bank.
Very interesting. Yeah, definitely. I want to ask you one final question, and it's a portfolio-specific question. We're seeing rising interest rates. We're seeing rising inflation rates. We're also seeing rising oil prices. Is this a good time to start looking at quality MLPs and quality REITs?
It's always a good time to look at quality investments and quality risk. No matter what it is, there's always something good for investors to find and to invest in. I happen to think that oil has been and is in the process of making a bottom, a complicated bottom. Someday we're going to look back and see that in 2015, 16, 17, 18, oil made its bottom and will then go higher. The known reserves of oil are declining all over the world, except for fracking. But fracking, that bubble has ended. Used to be, you could spell fracking, people would give you money. Well, people have lost enough money in fracking now that they know you've got to be careful. So, yes, oil is in the process of making a bottom and may have already seen its absolute bottom for all I know. And I would suspect in a few years everybody who owns oil or oil-related investments will be quite happy.
Jim Rogers, successful investor, accomplished author. I'd like to end this interview with just asking you, where can people find your books? Are they all on Amazon?
Yeah, everything I've written is on Amazon.
Absolutely wonderful, and thanks for being with us today, sir.
My pleasure. Let's do it again sometime. Thank you. Bye-bye.